All right, I want to talk about market timing and buying on the dips. I get this a lot, and let's just go over to it. So since October 2018, we've had significant time for you to exercise your domain over the markets, the stock markets, that is. Because from basically October 2018 till the end of December, till the Christmas Eve massacre, the market was down 20%. 19.8% market is the S&P 500, by the way. We had a 7% decline in May, and then we're down again about, where are we down? We're down another 5-6% right now. So let's first talk about market timing, and it happens to coincide with buying on the dips as well, and buying on the dips is even sillier. But let's talk about market timing. All right, so basically here is the graph, not the graph, but the data from using finance.yahoo.com, where they adjust for dividends. So here's October 1st, 2018. The market was at 266, and this is for the S&P 500. This is the Vanguard S&P 500 index fund. Now, this is an index fund. You can't buy it throughout the day. You can only buy it once a day. It trades at 4 o'clock when the market's closed, and it opens at 9:30. But it's a good proxy. All right, so here we go. All right, so at 266, and then it fell to 253 in October, 10 days later. So is that a dip? So we're just going to say 266 minus 253 is down $13. Divide that by 266 is down 4.8%. Is that a dip? Oh, whoa, no, but I held back. I didn't buy on that dip. So look, then it was down to 248. I bought on that dip, all right? But then it went back up to 255. But whoa, it started falling again at 241. I should have bought on that dip. Or I should have sold. What did you do? What did you do? Is that a dip you bought at? Because it's 241, then it went up. You're like, yes. Oh, no, but it went back down to 240. Oh, no. Okay, phew. But I'm glad I bought on the dip because it's down back to 249, right? Oh, phew, look at that. It's coming back. Uh-oh. Oh, it's back. Uh-oh. It's back up to 248, but no, it's gone down to 240. No, now it's back to 250. Shoo. All right. What's going on? 250, 240. 240 is another dip. Did you buy on that dip? It's another dip. Oh, no. All right, but now we're in December. So, things are gone. So, I bought on the dip, so I'm good to go. Now it's down to 232. Oh, my goodness. Oh, no. The dip I bought at is way dipper. It's dippier than what I bought at the dip. Now it's down to 225. I bought on a dip when it's down 4.8%. Now it's down to 225, whereas at 260. All right, so I'm like here. Now it's down to 220. The Christmas Eve massacre is down to 214. So what are you doing? Are you buying on the dips here? Because we have an experience where the dips kept going dippier, if that makes sense, lower. And no one's sitting here on Christmas Eve, the Christmas Eve massacre, saying, all right, the market's getting ready to shoot back up. No one's sitting there. So you bought on the dips, or you market timed, you got out. Let's just say you got out because you go against you're a trend follower and you follow the momentum. And you say, was the momentum? So it's kind of like momentum in football. There's always momentum in football until there isn't momentum anymore. That is just, I always love these announcers. They got to get the momentum on their side. Well, the Atlanta Falcons had huge momentum on their side when they're up 28-3 with 3 minutes left in the third quarter against the Patriots. Then something happened. What happened? It's just, that's the thing. Momentum works until it doesn't. You can't, this idea of momentum. So what happened to make the momentum stop from 266 on 1 October all the way down to, let's go here, 266 to 214. So 266 minus 214 divided by 266, 19.854%. Again, that includes dividends. What made that momentum change? All right, now we're at 214. So now we have the positive momentum. I mean, the Trump trade war, right? Because Trump in China was still, everything was, he hadn't changed his focus, right? He might have got together with Chuck and Nancy and talked about stuff, but he still had the trade war. He still was putting people in his concentration camps, right? As we talk about kids in cages and stuff, because only Trump was doing that. And yet, look at that. All of a sudden, out of nowhere, the momentum changed on the other side. All right, so let's keep going. So 244 to 240. That's a little bit of a dip, is it not? That's not much of a dip, Josh. So I don't buy on those dips. I only buy on the big dips. What is a big dip? I don't know, because if it's a big dip of 10%, well, if it's a big dip of 10%, you still bought 260 have to go 260 minus 26. You would have been buying at 234. So you would have bought on a big dip of 10% or more, pretty close to here. Probably would have bought that 240 maybe. I got to sneeze on. All right, so let's talk about buying a big dip. We'll look here, 230. You would have bought right there, and you still had more to suffer. All right, that's right there. You would have bought 10%. That's your dip. You would have bought, and then you still would have fallen to 214. All right, so if you would have bought 232 minus 214, you've been down $18 per share on 232. You would have still fallen 7.7%. So maybe your dip is 15%. All right, well, if that's the case, that's not a dip. That's I don't want to say a free fall, but that's a big sell-off, which means you keep a hell of a lot of cash. That's what cracks me up. Buying on the dips means you have to have cash to buy on the dips. You know how you buy on the dips automatically? It's just by staying invested. Because if you have a stock fund or a stock that reinvests dividends, you are inherently buying on the dip. You don't have to do anything. Buy on the dips without question by just reinvesting your dividends. But I mean, even if you bought on the dip here at when it's down 10%, you still were down another 7.75%. All right, so I mean, and if you said, well, I'm going to wait until it's down 15% or more, that means you're waiting on a lot of cash, my friends, because I don't have the chart right here. But there's a lot of, the average down market is 14.4% from peak to trough. But that means that happens once a year. And that's on average. A lot of years it doesn't happen that much. So you're sitting on a lot of cash for a long time. And that cash is sitting idle. So anyway, that's one thing about buying on the dips, which cracks me up. So let's go back here. We're going to show you back in May, because in May we had dips too. All right, so here's 260. And let's see where we go. Went to 267, 270, 262. There's a dip right there. Here's our May dip right here. Okay, sweet. So here's May 270. We'll just say 271 for giggles. And then by the end of May, we're down to 258. So that's a pretty big, or 252. That's a pretty big dip by then. All right, so if you're at 252, you're like, yeah, or I'm waiting for more dips because you didn't have more dips to come. I guess sneeze again. Hold on. All right, so let's just go back to the beginning of May. We're at 260. We'll just say 261. Then by May, June 3rd, we were down to 252. So we went from 261 to 252 minus 261. So that's down, 9 minus divided by 261. That's down 3.5%. Is that? I mean, that's a dip if I've ever seen one. And then it went back up. So we, I think it actually, no, it was down to 270. Yeah, it's 270. Excuse me, 271 minus 252 divided by 271. Yeah, we're down 7% in May. That's a pretty significant dip. Did you buy? And if you did, why would you have bought here on June? Or the 252 right here on June 3rd. Why would you have bought there instead of here or instead of there? I mean, that's the thing. What made you buy that one day when it bottomed out? You had no clue because you didn't do it. I mean, let's just admit you didn't do it. I didn't do it. No one did it. All right, so then you bought there and you're like, I'm going to buy on the dips. And what are you going to do? You're going to sell when it goes up 10% or so? I mean, I don't know. But what's your selling point so you can buy on the dips again? Because now it went from 252 all the way up to 270. Let's see here. I went to 279, going once, going twice, 279. We'll just round that down to 279. So it went from 252 to 250. It was up 27 points from 252. So you're up 10.7% up to 279. So as stock timing, market timing, did you sell right there? I mean, maybe you said at 10% up, I'll sell. I don't know. Did you? I mean, that's certainly not a dip. But if you didn't sell, that means you couldn't have bought on the dip right here, 262. I mean, inherently, you could not have done that. So it went from 279 to 262 in a matter of, what's that, a week? And that's 17 points, 6.1% in the last 7 trading days. How did you buy that dip? I mean, again, to buy on the dips means you have to have cash. If you've had cash, theoretically, it's been deployed since basically back in October, November, December. So how could that possibly be happening? Can we just call a spade a spade? It didn't happen. No one did it. And if they did, they underperformed for a vast majority of time because we started the year. We're at 262 now. What do we start in the year at? I have no clue. We started the year at 229. So we're at 262. After that dip. 262 minus 229. So we have 33 points divided by 229. We're still up 14.4%. I mean, so when did you buy? When did you sell? When did you buy on the dips? When did you sell on the highs? I mean, we are up 14% this year alone, my friends. So the idea that this is Trump or China war or something like that, how do you explain then 14% up after we've already took it on the chin and 6% down just in the last 5 to 7 trading days? You can't. There's just, you can't make that. You can't explain that. And because you can't explain it, stop trying to. Stop trying to avert or what's in front of your own eyes. Your own eyes is you can't do this and time the market. You just can't. You might get lucky, but you can't do it with any skill because no one knows. No one knows. All right, so anyway, I found that funny. It just drives me crazy, all these people. So the S&P 500 is still up 14.4% so far year to date, even with that major sell-off yesterday. And that's for today, when right now the S&P 500 is up 250. That's a Dow. The S&P 500 is up 33 points. So the S&P 500 is up 33 divided by 2878 minus 33 equals 33 divided by 2845. So it's up another 1.2% today. So put that in your piece by and smoke it, my friends. You can't time the market. You just can't. It's impossible to do. And I'll say that to them, blue in my face. I did it. I always hear somebody says, I did it. I just simply don't believe it. I don't. All right, we'll see next time. Don't forget to smash. We'll smash. Let's see what kind of news we got on here real quick. Sponsored stock market holidays and bond market holidays. I'll share with you. I'm going to do another video here in just a second. The one market that you can kind of bank on. I'll show you here in just a second. So stay tuned.